Good day, grade 11s. For term 3, week 1, you are required to complete the debtors collection schedule. You need to complete task 10.10, 10.11, 10.14, 15, and 16. Task 10.11, 14, 15, and 16, you are only required to complete the debtors collection schedule. Basically, what we are going to be going through in this example. Right, so the first thing that you need to understand about the debtors collection schedule is the term debtor. How does a business get a debtor? A business gains a debtor when we sell to the customer goods on credit. In turn, we get a debtor, someone who owes the business money. Why do they owe us money? We sold to them on credit. They didn't purchase goods using cash, they purchased goods on credit terms, meaning buy now and pay later. All right, so let's go through this. So they've given us the information, the sales for the period the 1st of November 20.7 to the 31st of March to 20.8. In November, we had total sales of 245,000, December 390, January 280, 210 in Feb, and then in March 175. The most important information that you will need when you are completing a debtors collection schedule is the terms of how they have basically determined through past experience how their debtors pay. Alright, so what does this additional information tell us? It says 40% of the sales consist of credit sales. So that's our total sales. In order for me to get what is my credit sales, because at this moment I'm only interested in the credit sales. Remember, how do we gain a debtor? When we sell to them on credit. So in order to work out my credit sales, I will say times 40%. Okay? In order to get my cash sales, I will then say times 60% is your cash. So that's cash and 40% is credit. Alright, so let us do this solution. Bazuko Traders Debtors Collection Schedule for which period? From January to March. That is what we are interested in. We are not interested in November or December. You want to know how much of the money will you be receiving from your debtors in the period of January, February, and March. So let's do this. Okay, so you'll see that we have the tables here. There's November, December, Jan, Feb, and March. Our total sales in November is 245,000. And there's our 245,000. If you have to work out the 40% of credit, let us go and work it out. $245,000 times 40%, our credit sales will be 98,000. So what will we do at the credit sale point? I'm putting the 98,000. And if we work out our cash sales by saying 245,000 times the 60%, you should get cash sales of 147,000 up. They did the very same thing for December. They took the total sales and we divided it according to cash and credit sales. 40% of the total sales will be 156,000. Very same calculation. 390 times 40%. Our credit sales was 156,000, which we have over there. And again, you will say 390 times the 60% of your cash sales, which will give you 234,000. And you'll do the very same thing for January, for February, and March. You'll first write down the total sales in the column provided, and then you have to divide those sales up in cash and credit. We know for certain that our credit sales is 40% of the total sale, and the cash sale is 60% of the total sale. All right. Now the important part is, how are we going to be collecting the money from our debtors? They told us that debtors settle their accounts as follows. 50% pay within the transaction month, meaning if I take goods on credit in July, 50% of the debtors will pay me in July, and because of their prompt payment, I will give them a 5% discount. The discount is basically an incentive to say, thank you for paying your credit up on time. I am going to be giving you a reward. That reward is a discount. All right. And this will encourage your debtors to pay earlier so that they can get the discount. And obviously your discount can differ from activity to activity. All right. So let's go and do this. So 50% pays in the same month. And do not forget about the 5% discount. Okay, we have to take 5% off. That's the first month. Let's go and look. Same month. 30% pay in the month following the transaction. So 30% pays 1 month later. What does that mean? 30% pay in the month following the transaction. So if the transaction took place in July, 1 month later would be August. So 30% of the debtors pay 1 month later, which will be the following month. 18% pay 2 months following the transaction. 2 months later. What does this mean? This means that if the transaction took place in July where the business has sold on credit, 1 month later would be August, 2 months later would be in September. So I'll take the total credit sales of that month that I'm dealing with, and I'm going to multiply it by the 18%. All right, to get how much I will be receiving 2 months later. So let us do that together. Then the fourth bullet point says 2% is written off as irrecoverable after 3 months. So after 3 months, if we haven't received anything from our debtors, we will just write it off as bad debts. Will we take it into account in the debtors collection schedule? No, we won't. Only if we are asked separately on a separate question. All right, so we are only interested in the first 3 bullet points: 50% with the 5% discount, 30%, and the 18%. Okay, let me just do that. All right, so why do we have November and December when it's not our budget period? It's because we will still be receiving money from the debtors who have taken credit in November. 2 months later, as you would have seen with this transaction, 18% pays 2 months later. All right, so again, your debtors collection schedule. Debtors is your keyword. What is a debtor? It is someone who owes the business money, someone who took goods or bought goods, purchased goods from the business on credit. So what are you interested in, grade 11s? You are only interested in your credit sales at this moment. Okay, you are only interested in the credit sales when you're working out your debtors collection and how they will be paying the business the money back. All right, so let's do this. Let me take this away. So in November, our credit sales was 98,000. Do you see that? It was 98,000 Rand. That's our credit sales that we sold to our debtors. It was worth 98,000. Now we're going to be working with this schedule that they've given us. They say that 50% pay in the month of the transaction less a 5% discount. That entry would have been made over here. But because it is not my budget period, I am not interested. So I move on to the next bullet point. 30% pay in the month following the transaction month. So if the transaction month was in November, 30% of them will pay 1 month later in December. But this is not my budget period, so I'm not interested in that. So I go to the next point. 18% pay 2 months following the transaction month. All right, so please note the transaction month was November. We sold on credit worth 98,000. 50% pay in the same month. 30% pays 1 month later, which leaves us with 18% who pay 2 months later. So how did I get this over here? I literally took the 98,000 and I multiplied it by the 18%. Why am I working this out? Because it does fall 2 months later. From November is January, and January is the budget period that I need to work out. All right, so we're going to work that out. So we'll take 98,000, multiply the 18%, we should get 17,640 that will be received in January, which is 2 months later from the actual credit sale month. I hope that makes sense to you. I'm going to move on with the rest of the activity. Now we're in December. What are you interested in, grade 11s? You are interested in your credit sales. Your credit sale for December is 156,000. Now you have that, and now you're going back up to your predictions. 50% pay within the month of the transaction, less a 5% discount. Do you see? We would have written it here, but it is not our budget period, and therefore we do not have to worry about that. 30% pay in the month following the transaction. So 1 month later, we will receive how much money from our debtors? Okay, so it will be 156,000. 1 month later is January. So yes, it's my budget period. I have to work it out. 1 month later, 30% pay in the month following the transaction. So I'm going to take the 156,000, which is the credit sale, and I'm going to multiply it by 30% because they said that 30% pay in the month following the transaction. This credit sale was made in December, which means in January you will be receiving. Let's work it out. 156,000 times 30%. We are going to be receiving 46,800 Rand in the month of January from our December credit sales. Are we done yet, grade 11s? No, we are not. 2 months later still falls in the budget period. 18% pays 2 months following the transaction month. So again, our credit sale is December. And what is 2 months later? 1, 2. So we will be receiving money from our credit sales that happened in December. We will be receiving 18% of it in February. So again, we take the 156,000 credit sale. And how much is paying me now? 18%. So I'm going to be receiving in the month of February 28,080. Let's go and see if we are correct. There we go, 28,080. 2% is written off as irrecoverable. That is why there is no entry over there. No entry. We're not receiving any money. So we're not accounting for the bad debts in the debtors collection schedule. Please remember that. Okay, now we are actually in our budget period. Okay, our credit sales in January was worth 112,000 Rand. All right. Now we're going back. Now we're going back to our predictions. And that prediction was credit sales was 112,000 Rand, and then they pay 50% within the same month of the transaction. So here we have January, and it's the very same month that we will be collecting. So the January sales is 112,000, and they said that 50% will pay in the same month. So let's go and see. 112,000 times 50%, we get 56,000. Okay, from this 56,000, we need to subtract 5%. So how will we know what is 5% of 56,000? We're going to take 56,000 times 5%. We're going to have to subtract 2,800. So subtract 2,800. Our collections from our debtors in the same month will be 53,200, which we have over there. All right, now we're moving on to the following month. Credit sales in January was 112,000. We are then going to multiply 30% in order to get what we will be receiving a month following that transaction. Again, you take in your credit sales of 112,000, and then you are going to multiply it by 30%. 33,600 of that will be received in February, which is over there. And then 18% will pay 2 months later. So again, you take your credit sale of 112,000, and you're going to multiply the 18%, which gives you 20,160. There is my 20,160. For February, obviously you're not going to be receiving anything in January because the credit sale took place in Feb. You can't work from the past. You have to work forward when you're creating a budgeted period. In February, our credit sales was 84,000. Are we going to receive money in the very same month? Yes, we are. They told us what? 50% pay within the transaction month, less 5% discount. All right. So we're going to take our 84,000. We're going to work out what is 50% of that. So we're going to be receiving 42,000 from our debtors in the very same month. But remember, we have to work out the 5% discount. So 5% of 42,000 is 2,100. You have to subtract that 2,100 in order to figure out what is the actual amount in cash will you be receiving in February for February credit sales. And we worked it out to be 39,900, as you can see. Then we're moving on to the next month. The 30% will pay in the month following the transaction. Again, grade 11s, we have 84,000 credit sales. So I'm going to say 84,000 times the 30%. That will be paying me 1 month later, 25,200. And there's my 25,200. And obviously we can work out the 18%, but it's not in my budget period, so I don't have to worry about that. Let us go and see March. Our credit sales in March was 70,000, and we can only account for the 50% that we will be receiving in the very same month, which falls in our budget period. So it's 70,000 times the 50%, multiply the 5% to figure out what is our discount. It's 1,750. So I'm going to take 35,000 minus 1,750, and I get 33,250, which we have over there. From this point, you are now complete with your debtors collection schedule, grade 11s, and you have to work out what is the cash receipts from your debtors that you will be receiving in the month of January. We're adding all our figures up in order to get a total amount. This is the total amount for Feb, total amount for March, 78,610. All right. So that is how you will complete a debtors collection schedule. What is important? You need to know what percentage of your total sales is on credit, because that is what you're going to be working with, and also the prediction of the company. How many percentage wise will you be receiving in your budget period? So I needed you to complete 10.11. 10.10 is completely a debtors collection schedule, so that's fine. 10.11 includes a lot of information, but all I want for you to complete is the debtors collection schedule, which we have over there. What is important? The information, your prediction. Please take note that we have total sales. They give us the month. They give us what actually happened in the months of, if you can't see clearly, please make reference to your textbook. February to June. In February, we made actual sales of 210,000, and in March, it was actually 175,000. The budgeted is what they hope to achieve, but it's still total sales. So you're going to take it into account. They just breaking it up for you. So when you're working out your total sales or putting it down, that is the total sales that you will take. And then you're obviously going to have to divide it accordingly between cash and credit. All right. So here they told us 60% is for cash, which would make your credit sales 40%. And then you have to please complete 10.15. Here they broke it up for you. We've got the cash sales, we've got credit sales. Obviously, if we add that up, we should get total sales. And they told us that 30% of our total sales is on credit. So you will see that for the month of December, January, and February, they've given you total sales, and you have to work out the 30% that will be on credit. And obviously, your difference is 70% that is on cash. Okay, and then your additional information that you are concerned with would be number 1 and number 2. Okay, a discount of 5% will be allowed to debtors who pay the accounts in the following month of sale. And then it is expected that debtors will settle their accounts as follows. That is what you are interested in. Moving along to 10.16, again, You only need to complete the debtors collection schedule, okay? Not the cash budget, just the debtors collection schedule, what we have completed now. What is your information that you are concerned with? It's your turnover, number 2, and number 3, the collection from debtors. All right. Thank you, grade 11s. That is your video for week 1, term 3.